Today we will talk about one of my favorite stocks, those stocks that billionaires don't want you to know. Cheap price, amazing dividend growth, amazing steady business model, perfect for passive income, but nobody talks about. It's not Microsoft or Apple or Realty Income. Warren Buffett's company owns around 10% of Store. As of June 30th, 2020, Store's CEO, Christopher Volk, is very well regarded in the real estate industry and has even created a profile on Seeking Alpha to communicate with shareholders more efficiently. If you listen to this, you will hear how smart Christopher Volk really is. Also, some of the comments were made regarding everyone's favorite REIT, Realty Income.
Freestanding net leased properties, and a net lease, by the way, you asked what it was earlier, I mean, just for those of you who don't know, it's basically a lease where the tenant pays for everything. They pay for property taxes, insurance. We don't have to deal with any of that stuff, and that's what our tenants do. So when people are looking at that kind of real estate, they make two key mistakes. The first thing is what I just talked about, which is they assume that pretty real estate is good real estate. I mean, if it's pretty real estate, it must be a good investment. I mean, how many real estate investment trusts throw up on a screen some picture of some, moth-eaten piece of real estate? I mean, they're going to show a picture of a really nice piece of real estate, and everybody's going to look at it and think, wow, you own that? This is really good. But they're not going to know what they paid for it or anything, right? So the question is a pretty piece of real estate a good piece of real estate? And the second thing, and by the way, a good investment. And the second thing is they assume that the credit quality of the tenant drives the desirability of the assets. So show of hands, and I can't see everybody because I got lights here, but if you had a choice and you could own like a Home Depot or an Ashley furniture store, what do you want to own? The Home Depot. Who's raising their hand for Home Depot?
There's a lot of hands up.
Okay, Ashley. Nobody. And then the rest of you might have been the smartest. The guys that didn't raise their hands might have been the smartest because it's sort of a trick question, right? Because to say, do I want to own an Ashley or Home Depot assumes that everything's equivalent, and they're not. So it turns out that if you're going to buy a Home Depot, for example, you can oftentimes pay twice the real estate, the price for the real estate that you could buy the Ashley for. In other words, the Home Depot might cost, $8 million to build, but you're paying $15 million for the asset. And you're paying it because you're buying a sort of a stream from an investment-grade company. So first of all, you're paying more for the real estate, which basically means if you ever get it back, if it's ever empty or the lease expires, it's going to be dreadfully difficult to deal with what to do with it. The second is Home Depot will virtually never give you property level profit and loss statements. You just don't know. So you could be owning a store not knowing whether it makes any money or not. And this is very important. Most people think that the credit pays you the rent. It does not. The store pays you the rent, and you know this because
I will stop here because we don't have all day. I know that you guys are hardworking people, but he said a couple of things that I can associate. Pretty real estate is not always a good one, and big corporations will not show you their financial book. Of course, there is way more good points about REITs, and you guys should definitely check this interview out. I will leave the link below. If you never heard about this company, STORE stands for Single-Tenant Operational Real Estate. The company operates in the triple net lease space, where the tenant pays for all the expenses related to the property like taxes, insurance, and maintenance. Occupancy rates in the industry are close to 100%, and STORE is no exception at 99.5%. Finally, STORE itself borrows funds in three forms, with asset-backed securities, with unsecured notes, and from a credit facility. As of June 2020, its total debt was around 45% of total assets. STORE leases to tenants operating predominantly in the service sector, which accounts for 65% of the portfolio. The remaining 35% is split between retail and manufacturing. Market cap of $7.06 billion and lowest price of $14 in last 52 weeks. With all challenges in 2020, STORE Capital declares 36 cents per share quarterly dividend, a 2.9 increase from a prior dividend of 35 cents. I know you guys are smart. Stock increased dividends, while stock price is down around 35% from February. They are collecting almost 100% of their rents in the middle of a pandemic. For me, that is a huge buy. STORE is a buy due to its superior business model, a history of growth, It's excellent and transparent management and an attractive price. It might take some time for the stock to climb above $35 again, but in my opinion, the long-term prospects of the business more than compensate for the short-term risks of pandemic. I'm not sure about you guys, but I love dividend increases in this time, because we don't see it often. If you like this video so far, please smash that like button. Store Capital, STOR, is an undervalued REIT with great long-term prospects, despite the currently challenging times. It is prudently managed and has been able to navigate the downturn without cutting its dividend. Not only does Store Capital have a genius business model to stand the test of time against disruptive innovation, but it also has a generous dividend, another reason Buffett is a fan.
Secular trend. This is triple net leases, and actually the guy who invented them is the chairman of the company. Warren Buffett is the largest shareholder.
While most people assume real estate falls into one of four categories, retail, industrial, office, and multifamily, Store Capital, STOR, spreads its wings further and owns service-type assets. For example, restaurants, early childhood education, fitness clubs, movie theaters, veterinary clinics, pet boarding centers, oncology clinics, and urgent care clinics. Not only does Store Capital have a genius business model to stand the test of time against disruptive innovation, but it also has a generous dividend, another reason Buffett is a fan. Store Capital is proud that one of best investors in the world is investing in them. They even have that on their website. I just want to take a moment, give you same time to smash like button and subscribe. And if you didn't, press that bell to stay alert for new videos. I'm not sure what you are waiting for. Let's hear what this genius has to say about his company and why you should invest in some company like this.
Berkshire Hathaway is built to be forever, and it's true of all our businesses that we own. And so you want to be part of an organization that's not looking to sell out next week or next month or next year, or where the founders, when they leave, the place will crumble or something of the sort. In terms of permanence, we've got an organization that not only can't be topped by anyone, but can't be matched by anyone. And I would want to be associated with somebody that had that sort of long-term future assured, where the financial strength was unquestioned, where the name stood for integrity, and what quality that you would want does Berkshire Hathaway and Home Services not have, and I don't think you can find one.
Thank you guys for watching. What is your opinion about Store? Is it a buy right now or no? If you still didn't start investing, I will leave my Robinhood link down below. Register and get a free stock. Buy the dip. Love you all. See you next week.